Booyah. What financial celebrity says that? Booyah. Good turnaround Tuesday, everyone. How you doing, Hugo, Richard, Raj, Jays, what's going on? Shalom, Ingmar. Everyone doing okay? CPI, the big deal? I'm fine. Okay. So we're getting some pressure ahead the number on here. Here you go. Hi, Barry. Yes, Yom Kippur coming up Thursday. Gonna ask Blake if I could celebrate that solemn day. All right, so we had a rally attempt. I thought yesterday was pretty good follow through in the S&Ps, even though we recovered. We had a nice sell-off from early morning strength up here, and NASDAQ failed where it had to, right up here. Prior support I talked about yesterday becomes new resistance. I don't see it doing anything real right yet. I think this is the whole market, guys, and they're having a dog and pony show today. So maybe it'll get a lift, but check this out. Okay, so that's a wedge line on Apple. It's Wile E. Coyote on the cliff. There's a big picture. Would you want to be long a chart like this? Forget what the title of the chart is. Largest market cap in the cosmos. And they're going to show off some new. Jays, you own 1 million shares. I just transferred them over to you. Now pay me. All right, anyway, so goes Apple, just like the apple that fell from the tree. So will go the market in my. Oh yeah, I think the watch will. Yeah, everyone buy a watch. Okay, enough of Apple. It's got a worm in it, as far as I'm concerned. Don't eat this apple. Stay in the Garden of Eden. So what could happen here in currencies if we get a strong number? I was kind of looking at this little short-term formation here. We have confluence at the 17.5 level for, where you would have symmetry for a right shoulder compared to the left down here. Hi, Paul, how are you? Gosh, I'm having old timers disease. Trying to remember you. Anyway, refresh my memory. Japanese yen, if we get a number, maybe it'll finally push. Oh, that's right. Hiya, Paul. That's right. Gosh. And we just met. 10-year trying. So I think a lot of things boil down to the number. And then I was looking at Dixie. And what was it? Maybe we get one more push if we have a stronger than expected number. The market thinks that we're going to get a soft number. So it's set up for maybe a surprise for one more shot up here in the dollar. So not a lot of positions going in, but I believe that we held the wedge line or the uptrend in the S&Ps yesterday. Look at that. And that 50-day moving average is something I saw on CNBC. It's really worked fairly well. So I think a lot of people are going to be paying attention to that trend line. And it lines up with Blake's wedge line, pretty close to it. Probably when Blake is on, maybe it touched it yesterday when it sold off a little bit and then recovered. So
it sure did.
So did it tag it, buddy?
Yep, it sure did. We'll look at it here in a minute. Go ahead. Continue
Oh,
on.
okay. All right. So anyway, I have to keep going. Bush Dale. Remember that, Blake, when you used to have a dog sled? Anyway.
Yeah, mule.
You know, the crude looks like it's breaking out, but is it really? It kind of doesn't go with like a de-risking thing. And you know what China's doing, guys? Off the 20? Okay. They're deleveraging. I mean, I don't know. It's like they want to it's a big deal, I think, that the market's not, is starting to pay attention to how they're not bailing out certain companies after they were so easy for so long and then got very restrictive, and they want lower commodity prices. They're trying to step on the markets here, I think. So you can't have it both ways, where it's an engine of growth when it's growing, and if it's an engine of, draconian financial measures, that's going to have an impact on us eventually, I think. Don't you, Blake? What
I'm
the
sorry, the
Chinese are
draconian
doing,
measures about on what?
what
I'm sorry.
China's been doing, deleveraging. They've decided not to bail out some companies. What they've done with a lot of their tech companies, Jack Ma and the confiscation, and now it's very unpopular to show your riches there. I mean, they're really cracking down on financial freedoms there,
Yeah, I
and
mean, I don't know how that's going to affect us here. I'm
growth. If they, I don't think the world could have it both ways and call China an engine of growth that's going to lift the rest of the world or participate with it, and then when they're contracting, be able to ignore it.
Yeah, I do believe that the China slowdown is a real phenomenon that we're going to be dealing with. So I guess that I misinterpreted you.
Yeah,
I
okay.
think that it's going to the China slowdown is going to affect us in mentality, the psychology of the markets. Yeah, I think that's where that's what's going to weigh on it most. I mean, we have a lot of headwinds that we're dealing with just in general. I mean, you take today's inflation data. I mean, there's arguments, and matter of fact, if you guys heard Eric from EPB Research that I did an interview with the other day, we're talking about like inflation data is, may have peaked here. And I think that's like the general theme that we've got to be thinking. And so if you see like, inflation come down a little bit today, it's probably going to keep a little bit of a bid in the stock market, but we've got a lot of headwinds between that, the risk of taxes going up. I think that, we're heading into, September, which is a, historically kind of tough month for the markets, because, you get if you're going to get a sell off or any type of pullback in risk assets, it's going to be the September, October, November timeframe before, you get a risk rally into the holidays. So, I mean, we're faced with a lot of near-term risks, I think, in the market. And then on top of that, you throw in a China potential slowdown too. So, I'd be careful with the markets here. So,
Hey, buddy, what are you thinking currency wise here?
Well, first of all, I have to say that in the currency market, it's been pretty quiet. And let me grab the computer charts really quick. We don't have Ryan today. If you guys were,
Stel. I know Stel's around.
I don't care about that Stelios guy. Oh God, he's here. Hey, Stel. Good morning, Stelios. How are you?
I'm very well, thank you.
I guess it's nice and quiet around your house. You don't have your kids, your girls running around. Nice.
It's lovely, yes.
You can actually focus. You can focus now, huh, bro?
Yes, indeed.
Well, I was going to say, well, it's nice. I know you and both you and Steve have your having the kids out of the house is nice. For people make a big deal out of it that normally, you know, I think during the COVID last year and a half is really weighed on people. They're like, thank God my kids are out of the house. But, you know, for those of us that we have been for years and years and years trading and working from home before COVID was even around, we're kind of used to it, right? It's like I don't mind when my kids are around. It doesn't bother me, but I know it weighs on a lot of people.
Yeah, I find it hard to get work done when the kids are around just asking about stuff. Anyway, it is what it is. Yeah.
Yeah. So we don't have Ryan here today. But speaking of kids, he had one of his sons had a little bit of a tooth issue, so he had to run off to the dentist. So we're not going to have Ryan here today. So for those of you that were expecting the Jason how do you say his last name?
Statham.
That's him. Sound alike. He's not going to be here today, unfortunately. So Ryan's not here. What are your thoughts about overnight price action? What's happened overnight? Wait. Before you get into that, Dale was asking me about the about currencies really quick. I want to pull up one currency that, you know, I have a little slice long of the US dollar South African rand. Last week, as we made this little false breakdown at the end of last week, I picked up a little bit, you know, in the teens here, and, you know, it's starting to peek its head up. But the reason why I did is because we had a 618 retracement, false little breakdown. Look at this move. And I want to just show you like on an hourly basis. And now I'm going to be running into some issues today because, you know, it is, or not today, tomorrow. And I never really thought much about this when, you know, I traded in size, because when I trade in size and I trade some of these like, emerging market currencies, I was in and out of them pretty quick, and I didn't see the rollover costs, even though I'd see them at the end of the month. I'd see, you know, during my look at my brokerage statements from JP Morgan and some of the rollover costs, I'd be like, oh, but, you know, day to day, I actually see them on my retail platform now that I don't trade with, you know, JP Morgan. And so the reason why I'm telling you that is because I don't know if I'll be holding this going into tomorrow when I get massive rollover charges. But I want to show you that, you know, the hourly RSIs have been really divergent, and you can see that we've really started to base here, and we're, you know, we've had a hell of a move lower. And if we see any type of risk off, you know, to get now that was a 8% move just to retest those highs would be 8% from here. I'm not thinking that right now, but I'm thinking a recovery rally, you know, which could be 2-3% higher in the US dollar South African rand, especially if we break above the 1426 level. I think it's something that you guys should be paying attention to, because this one could get up and move. These I do like to trade some of the emerging market currencies like the dollar max, the dollar rand. These are ones that I try to take advantage of, especially if I think there's going to be a little bit of risk aversion coming into the market. So just keep your eye on the rand. It's one that I think that could be played, especially on this little false breakdown and respect of the 618 retracement as we head into this week. So anyway, Stel, sorry, I wanted to say that really quick before you prepped us with the overnight price action. So what's been happening overnight? I know we got some employment data out of the UK. Anything else that you've seen?
Well, you're right. Average earnings out of the UK, 8.3% year on year. So that's not a bad number. So this goes back to what we were talking about yesterday, that it's not just inflation that we're seeing in terms of sort of CPI and all that, but we're seeing this in earnings as well. The event today obviously is the CPI out of the US. Now, what I wrote in the chat room, and my view is that inflation is here to stay and it's going to be high and probably rising more going into next year. However, this time, on this number today, it feels like the whole market is expecting a big beat. I mean, everybody I speak to or read, they're all going, "Oh my God, this is going to be close to 5%," and core CPI close to 5%, CPI year on year maybe close to 6%, whatever. As with all these things, nothing goes in a straight line. It feels like eventually there's going to be some kind of disappointment, even just for one print, right? We've had prints that just go up, up, up all the time. At some point, there's going to be disappointment. So even though I think that inflation is here to stay and is going higher, I think that for today, the risk for me is that we get a slight disappointment in the reading, and then the market gets caught one way, and
well, guess what happens if we have a reading that comes in a little below expectations?
Yeah, well, there's going to be, metals are going to do well. The yen is going to move. Yields are going to move.
I think stocks rally.
Stocks rally off support. Exactly.
Yeah.
And I was having a conversation with a friend of mine yesterday, and he was saying, what do you think about stocks, US stocks in particular, but global stocks? I said, look, for the past 10 years, really, the main driver for stocks has been low rates, QE, and just the total mispricing of risk. So I told him that I think stocks are only going to turn around when the punch bowl gets taken away. How long will it get taken away for, or to what degree? It doesn't matter. But that's when we're going to see stocks properly retreating, which means yields are going to be rising. The Fed is going to tell us, look, we're tapering by a decent amount, or we're going to be hiking. That's when the market, I think, is going to crap its pants and move lower. How much lower, I don't know, but I think 20-25% correction is more than healthy in equities. But until we get to that point, I don't think stocks are going anywhere apart from a slow grind higher. And that's why I think inflation is very important, because really this is the thing that's going to be driving central banks and the Fed in particular. As long as inflation keeps rising and it's relatively high, they're going to have to act. To what degree, it doesn't matter, but they're going to have to act. And that's what the market will fear, at least in the short term. And we're going to have probably not like a COVID-like move, but we're going to have a nice little dip. There's going to be dip buyers. They're going to get, their asses handed to them. And then we're going to dip a bit more, and then we're going to recover. So that's what I think. I think today's CPI, the risk is that we get a softer than expected reading. But overall, I think inflation is going to be high, and it's going to be higher than expected for, at least going into next year.
All right. Well, let's also keep in mind that, and I'm going to reiterate, if the data is a little soft today, we should get a rally in equities. I think people are bracing for the worst. As Stelios said, everybody's talking about, you're looking at year over year. I mean, if we get a 5% read, I mean, that would be really, and I just had the chart up from, investing.com, so you can actually see what, a 5% read would be. Obviously well above expectations at this point, even though the market's looking for 4.2%. The fact of the matter is that the market's bracing for higher data. And yeah, if we do get a beat today, if we do have higher inflation, stocks may get hit. They might come under a little bit of pressure. Now, Dale asked about that trend line. Yeah, we tagged that trend line yesterday. And if for those of you that don't know, we have the broadcast for our Forex Analytix subscribers every day that we do right after this webinar, right after Dale's interview. In less than an hour from right now, we do the morning edge, where the morning edge, we cover all the instruments, and the S&P support was 44.50. It's huge. It was huge yesterday. We got to, let's see, what's the low there? 44.45, just kind of probe below it. But you guys can see, this is the wedge that's been in existence since since we can see the lows back in October of last year. So you're talking about an ascending wedge that's been in development since 11 months ago, and everybody's looking at it. I mean, if you're just now tuning in for the very first time to today's webinar, welcome. Glad you could make it. But if this is the first time you've seen this chart, then you might be the only one, because everybody else is looking at this chart too. We've been looking at it for months, and now everybody knows the very, very important low. Problem with everybody focused on this chart is twofold. A, everybody knows about it. So B, any breakdown might not be so significant. Unless it's for a reason, right? Unless there's for a reason. And you guys might recall from a few weeks ago when we did this little breakdown below the support, and it tested the wedge, or actually, it did a little bit of a false breakdown because we did this. Okay, we broke it like that, and then did a false breakdown for the day, and then we reversed. So now we're going to be marking up the tips, if you will, of those moves lower. So you can see it is very important here. So as long as we hold this week's lows, I wouldn't be getting too short, quote unquote, risk at this point, and that's the way I'm looking at it going into today's data. Now let's cover just a couple of currencies really fast. You probably saw the sterling that was up here. We've been pretty range bound in the sterling. The 139 levels capped, the 137 and a quarter levels, is where we find support. You might have saw it a little earlier if you were tuned in before I deleted everything. I think Stelios was talking when I started deleting this. This is a pretty simple setup here. You got a bullish wedge, but a break below 138 and a quarter targets the 137 and a quarter level again. So you got you could squeeze 60, 70 pips out of here, in my opinion, by the time you got in and got out, if you just want to play inside that range. But we also have the risk of a break above 139 will take us right back to 140, and 140 is going to be a pretty big resistance for the pair as well. So just keep in mind that we have a couple options here with the sterling, and we did have some decent employment data out of the UK overnight, so that's something to think about. Now, also, I want to mention that the Aussie dollar. This was my chart of the day yesterday, and the one thing that I have to keep in mind with the Aussie is that while we're above this 38% retracement, you can see that we're just kind of probing it. And in Europe, we just kind of, might have gotten a few people short here, because you have to imagine this little red candle, that was more red a couple hours ago, or maybe an hour ago, right? So it looked more deceivingly bearish an hour ago. And so you imagine all the people that just kind of got short on that. They're like, I'm going to sell my Aussies. I'm going to get short, whatever the case is. Oh, I'm going to target, 172.90, the 50% retracement. That's a break. We're going to go ahead and get short. Well, this is a bull flag pattern right now, and you have to pay pretty close attention to it because, as a bull flag pattern, if equities are going to hold that 4450 level and head back to 4,500 in the S&P, that may be what gooses the Aussie, back above the 74-cent level. So just keep in mind the Aussie is set up for a bull flag. I'm not, and I don't have any Aussie exposure. This is something that I'm obviously just keeping an eye on because I'm more concerned about risk aversion and risk appetite. So obviously, if the Aussie starts breaking, down towards the 72.80 level, to me that suggests that the S&P is probably ready to break 4450, and we're going to see a much bigger correction in the S&P. The flip side to that is if we break back above 74 cents, then I'm going to be very reluctant to be bearish risk, and I think that the S&P, like I said, is heading back to 4,500 and maybe even all-time highs. So keep that in mind. Another thing
Blake, that we have to talk about Norway as well.
Oh yeah, tell me about Norway. I mean, we're range bound. The krone isn't doing anything, and we're trading between that 860 and 73. But
Yes.
yeah, we're past the election. What's happening now?
Yes. So basically, the Labour Party, so the how'd you say it? They were not in power before, so basically they are now, they've won, and they're looking to form a coalition. And these guys, they were talking about how Norway has to get off the whole oil industry for the climate and all that, and but then it kind of everybody now is talking about how I think around 5% of Norwegian population is involved in the petroleum industry in some way. So it's not something you can do from one day to the next. It's going to be a long-term plan, a decade or two. So this is not something that climate and all that. Yeah, exactly. So it's not something they're going to flip a switch and we're going to be off oil from one day to the next. So yes, there's a new government who have different plans, but it's not like things are going to change overnight. So the krona is doing nothing. If anything, it's actually strengthening a little bit, but overall, it's behaving pretty well.
Sell Norway, buy NFTs. That's all I have to say. That's it. That's the trade of the decade.
Sell the actual oil and buy NFTs of oil.
That's it. That's right. We're going to buy NFTs of oil paintings, not even oil, just paintings.
Did you see that thing with Steve Jobs' first job application? Did you see that?
No, I didn't.
There's a piece of paper where it's his first ever job application. It's already changed hands a few times in auctions, and it was up for auction, the actual paper and also an NFT of the paper, whatever that means. And the paper got sold for like $400,000. Makes sense. And the NFT, I think, got sold for something like $40,000. And I'm like, okay, you who bought the NFT, tell me what you bought. I want to know.
Well, you bought the only one digital image of that piece of paper. So
yeah, but there are a million digital images on the internet of that paper.
Exactly.
Anyway, I don't get it.
You have the original digital image,
but you don't have the original piece of paper.
But
anyway,
yeah, but I have the original digital image that is of the original paper. So
yeah,
okay. Anyway, yeah, whatever. We can all talk about it. But speaking of which, let's talk a little bit crypto really fast. And I think I heard Steve's voice in there. Steve, what's going on?
Good. How have you been?
Good. Okay, so there was this news on Litecoin yesterday. Well, not news. It was like fake news. Litecoin spiked up, took the crypto market with it. You can see Ethereum ripped up, then came back down. It was obviously fake news. Bitcoin did, and we have some pretty important levels. 43,000 with Bitcoin, 3,000 with Ethereum. That's what we should be looking at. Well, those are I will argue bull bear lines for those crypto markets right now, and it's really based on last week's price action. And I'm sorry, I just realized we have 2 minutes before the inflation data. So Steve, really quick, as we go to, I'm going to pull up today, I'm going to pull up the euro dollar, and we're just going to keep it on a 5-minute chart for the euro as I pull up the inflation data. But really quick, Steve, how do you feel about the inflation picture with inflation data coming out? Anything that you have, any expectations that you have?
The data can be volatile on a month-to-month basis, but if you look at them, both CPI and PPI, all year long, there is absolutely zero evidence that whatever we're seeing is transitory. Zero. We haven't seen a spike and a slowdown following that. We haven't seen something short term with any type of indication. For example, we haven't seen CPI spike, PPI spike, and now PPI deflating. So we can start hoping that, that's a leading indication that CPI is going to inflate. Anything and everything that we've seen so far indicate that that inflation is a huge problem. And given the fact that there are no measures taken to fight it, and the only thing that central banks are doing are denying that there is an actual problem, in my opinion, guarantees that the problem is going to become bigger. And
you should write a doom, gloom, and boom report, man.
Dude, I'm telling you, you're taking over Mark Faber's old gig.
He's right, though, unfortunately.
Yeah,
Okay,
I mean,
so
look, I do agree. I mean, obviously inflation pressures, we'll soon find out how real they are. But today, like I said, oh, here it is.
Let's see.
2 minutes, 2 seconds. Here we go. Wow, data is weak.
well, I told you. Nothing
Yep,
goes in a
stocks are
straight line.
ripping. Look at that. Stocks are flying.
Well,
So if the inflation comes in weaker, we got a 4% print, stocks are going to like it, dollar's going to weaken, and that's what we're getting. So take a look at the SPOOs here, rallying off of support. Actually, I should probably put it on the hourly chart here. You can see that the S&P is coming right off of support. Dollar is weakening. You got the Aussie that's creaming back up towards resistance. US dollar, Norwegian krona has broken through support. Dollar Canadian should be breaking. Oh, here we go towards triangle support. That might be a nice little breakdown here today. So inflation is weak. Assets I think.
Good call, Stel.
I get lucky sometimes.
You're like Nostradamus.
And one of the reasons why the people are playing a lot of the long side today in stocks, and they got a favorable, not so hot print, is today's Apple Day. Yeah. Today's Apple Day. So, all right, guys. Hey, I want to say thank you to our webinar sponsors. That's Forest Park FX and Pepperstone Securities. Forest Park FX is if you're not getting cashback rebates, or you're not trying to get into our reimbursement program so you can get Forex Analytix potentially for free, make sure you reach out to these guys. We've been working with them for years. They've obviously been our webinar sponsor for about 4 or 5 years now. Make sure you contact them on Skype, or you can send them an email. You can find their information right at the bottom of our website. I want to thank you guys and gals for being here. For those of you that are Forex Analytics subscribers, we'll see you on the morning edge in approximately 45 minutes. So see you there.
Bring your razor, traders.
Thanks, guys.
Thanks, everybody.
Okay, John Navin, really a pleasure to meet you. I'm very nice of you to take some time out to talk to our community today, John. Appreciate it.
Let's see. How do I start this?
Well, it started. So I'm not sure if you wanted to share your screen. Did you bring anything you wanted to show? I could share mine. Or
there you are. I see.
Okay. Oh, okay. Hi, John. All right.
I'll
turn my camera on too, and we'll do one of these interviews. So, John, very nice to meet you.
Nice to meet you.
I appreciate you taking some time today. So, John contributes to Forbes. Why don't you tell us about your road to becoming a financial journalist, and what you do now? And I actually I am going to share the screen a bit to because I want to just show some of the articles that John's written right here.
Oh my God.
Okay, so
I wrote all that, huh?
Yeah, I mean, you're following the whole gamut here, John. So you're covering crypto and everything, and just from your headlines, and I know you don't give investment advice, but I bet you're like me and you've seen a few cycles.
Yeah.
What's your vibe about what's going on here? We got the market liked the fact that we didn't have a hot number today on the CPI. Have you ever seen an era of speculation like we have today? I mean, with
Sure.
things,
A couple of times, late 1999, leading into the end of the tech stock boom.
Okay.
Just to give you the background, Dale, that was the year 2000. I entered the online stock trading competition called Marketocracy.
Okay.
It's come and gone since then, but they gave you $1 million of virtual money, and you had to put together a portfolio based on standard mutual fund practices.
Sounds like what the Fed does.
Yeah, you had to diversify 20 different stocks at least. No single stock could be more than 25% of the portfolio. You could never be more than 35% in cash, and so on and so forth. At the end of the first year, I did well enough that they invited me to become a member of their Masters 100 fund. They called it the M100. That was real money. And they started paying me. And then by 2010, I placed in the top 10 out of 80,000 participants in Marketocracy. So the investments editor at Forbes gave me a call, said he was writing a book about the Masters 100 fund with Marketocracy. And could he interview me? I said, sure. So I ended up in this book, Dale. The book is called The Warren Buffett's Next Door, The World's Greatest Investors You've Never Heard of.
I've heard of the title.
Yeah, I'm not Warren Buffett. I'm not one of the world's great investors. The performance by 2011, 2012 had fallen off a bit. Matt asked me if I wanted to write a blog for Forbes because I had some news writing background. And I've been doing it since then. They let me write about anything I want to write about, but I stick mainly to stocks and stock markets.
Okay. So, I think that a lot of us at times reach a crossroads in our career because, John, I really do believe that trading is really a young man's game. I've noticed that I don't handle the pressure the same way I do, so I don't put as much pressure on myself as far as leveraging up and so forth. But I've never been to a retirement dinner for a trader. Have you?
No, never.
That's because so I'm wondering what was it that led you to, because obviously you had skills. You won contests, you traded real money. You probably had some great years, probably had some hits, just a part of it. What made you decide to give up trading, which, people try and walk away from it and have a very difficult time doing so?
It is too stressful. I had a seizure once. That was enough. The doctor prescribed medications, Keppra and gabapentin. I've been taking them for years. And so I don't trade anymore because it's highly stressful. I agree with you. It's great to be young and doing it, but much past the age of 65, I'd rather take it easy and just write. But it's a fascinating world, isn't it?
Yeah,
just to observe and write about
jigsaw. It's a jigsaw puzzle. It's really, it's an exercise. We don't have to worry about brain fatigue like a lot of people do brain exercises to keep themselves sharp. If you're just a market watcher and analyst of the market, that's a big enough puzzle to put together, isn't it?
Yeah.
To keep you active. So what are you seeing here, guy? What are you seeing here, John? I mean, I saw a few of your articles, and I see, I'm the boy who cried wolf a few times this year, so I'm still seeing some pretty negative divergences. I know that the rubber band stretched further and longer than I thought it would. I thought we'd be peaking in June, and here we are, in September. Do you think that we could be setting up for something meaningful into, what is seasonally a weak period, or are there too many people looking for it?
No, I think it's just us people who observe this closely realize the potential for some serious selling off. I don't think it's widely viewed that way among, the masses. Or among even people on Wall Street generally. Here's what concerns me right now, and I wrote about it in the last article. It's the looking at the number of stocks now trading above their 50-day moving average. Every week it's lower and lower.
Shrinks.
We've got the phenomena of money flowing into Apple, Microsoft, and Facebook, and flowing out of almost everything else. So I keep a close eye on IWM, the Russell 2000. It has not been hitting new highs
for
and
8 months now.
yeah. I
Okay.
used to, I did an Elio Wave seminar with Robert Prechter long ago in the early 90s. And I don't know how much predictive value it really has, but I learned it so well. One of the great benefits was you analyze price charts carefully every time. And right now, looking at some of the E-Wave stuff, it's gone a long way. I don't know how long it can keep extending like this.
You know, I'm like an amateur, you know, like it would be like I wouldn't call myself an astronomer if I looked through a telescope once, right? But I talk to a lot of people and I know a lot of Elioticians, and they say that the difficulty of predicting a top for this wave is that it's an ending third.
Right.
And that's really the most powerful part of a market advance. So trying to top pick all that power can be painful if you're early.
Right.
But that means there's a pretty big four coming to the downside if we're peaking here.
Yeah.
And what do you think? What kind of correction could we get here, John? If that's a
20 to
count?
30%, I would
Okay.
say.
Okay.
I'm ready for it.
Okay.
You know what
All
else, Dale? You look for signs of excess, and I think we see it in the cryptocurrency markets, at least.
Okay.
Well, I mean, I've never seen anything like it before.
Me either.
Just
What's
to-
an NFT, John? I don't even
I
know
was
what
just about-
I can't even define it. What's an NFT?
I don't know. Well, I
No
mean,
frickin' trouble. I'm not sure what it is.
it's something to speculate in if you have too much money.
Okay, that is really a sign.
Yeah.
How about this, John? You ever see the commercials about there'd be like a football game going on or a big business meeting, and all of a sudden someone out of place shows up in the commercial, and they're like, "Well, who are you?" And they go, "Well, I invest in the QQQ."
Yeah.
Have you seen that commercial?
Sure.
All
Yeah.
right. So, you know, I mean, it's very fashionable to, you know, I invest in the future. The QQQ. It's like a Barron's cover to me.
That's right. I think that's a sign of speculative excess. I think the nuttiness around the cryptocurrencies is another sign. It's the sort of thing you saw about tech stocks in 1999 going into 2000. It's a vibe, you know?
Yeah. Where do you think flight capital is going to go? The dollar?
Yeah, I guess that's what the charts say. I like it that people have lost interest in precious metals, basically.
Yeah.
Even though on the monthly chart, it's still an uptrend. You don't hear anybody talking about it.
No, you don't.
I'm wondering where the money will go if the crypto starts selling off. Those people, who knows? I don't know.
Yeah, they're most of them are anti-gold. It's a big debate you see all over financial media. They'll get a gold bug and a crypto guy together and argue which is best. You know, I talked about last week, neither of them were.
Yeah.
Okay. We had down weeks in gold and Bitcoin. To me, it almost felt a little bit because there was no real news, and it's not because the dollar was real strong, almost felt like a liquidity event to me.
Yeah, no. I see somebody commenting in the comment section that we're boomers, Dale, and it happens to be true that we're shaped by our experience. So naturally, I'm going to look at gold because that's what we looked at in the 80s, you know?
Yeah. Anyway, you know what? I feel very fortunate to be a boomer and have lived through the greatest period of music and days of trading floors, and when, you know, you had camaraderie among traders and it was a big family instead of everyone sitting in their bedroom trying to do this. How about that?
Now, I have two sons. They're in their 30s. One's 33, the other's 30. and they start rolling their eyes and shaking their head when I start talking about this stuff. So I
Yeah.
try to avoid it. But I agree with you.
Well, I'm glad I could give you a little outlet. Guys like us, maybe we should have a support some type of support group. But maybe since you are more of a journalist than I am, can you explain what this phenomena is about the banks having so much cash that the Fed has to do all these reverse repos to mop it up? Do you know what's going on there, John, at all?
No, I don't understand it.
Yeah.
All I look at is price charts, and I'm stunned to see XLF and the banks in general, and even regional banks continue to trend upwards. Although, I understand it. I see low rates and the potential for negative rates on bonds, which is taking place, I guess, in Europe. But beyond looking at price charts, no, I don't understand it.
Okay.
I've never seen it before.
All right. Well, let's switch gears to rates and yields. And, yields have been stuck. I was more aggressively thinking about over 2%. And, I think eventually we'll get there. And I do also think that the lows are probably in. But you're right. I actually talked to someone who said during World War II, we were actually at negative 13% real
Is that right?
rates.
Wow.
Yeah. So I think we're negative 1 or 2. What's your take on bonds? I heard a quote from Bill Gross yesterday. They're talking about his lawsuit. He plays music. Him and his neighbor aren't aren't getting along. I guess when you don't have $20 billion bond fund to manage, you have to find something to do. So anyway, he says that the bonds are the next investment to hit the investment garbage can.
Really?
Yeah, that's Bill Gross. So I think that the Fed took the bond markets away from us after COVID. Don't you?
I agree. I don't have a good feeling long term here. Eventually rates have to go up, don't they? Or am I? At some
I don't know.
point,
We're boomers. We can't get used to a lot of new paradigms. I don't know if they have to. I think that we're due to, but I thought we're due for having stock corrections before too. So what are you looking at for maybe your next piece in Forbes? What do you maybe you'll be talking about market corrections, and you have a line in the sand for technically what would give you maybe people start realizing that. I'm thinking they buy the first 10% down, right? Because that's just a garden variety correction.
Right. And here's the thing, Dale. So many people have been trained to buy the dip these days. Not just in cryptocurrencies, but it's happening in stocks. Those charts you were looking at of the S&P 500, as soon as it gets back to that uptrend line, the dip buyers come in. I think my experience is they have to be punished before they stop doing it. And that's where we're headed.
Okay, John, I'm gonna follow you. You have this. Is this on a blog site or something where I could get your articles?
You go to I'm chapter 10 in the book. The PDF is online. Although I think Matt would appreciate it if you bought the book. Or go to Forbes.com and search for John Navin, and you can find everything there too.
John, I don't know about you, but I'm glad I talked you into it.
Nice talking to you, Dale.
I really enjoyed it, and some pretty good insights and fun to boot. And I appreciate your time. That's our most important currency nowadays, isn't it, John?
Yeah,
time.
Definitely.
All right, so continue to enjoy, and stay healthy and stress free. And I'd love to talk to you again. Let me know if you're up to it.
Sure, we will, Dale. Thanks so much. I enjoyed it.
All right, you can follow John Navin at John Navin on Twitter and read his stuff. And you know, you're getting it through the eyes of experience. Here's what I say about experience, everyone. You can't learn it. It only comes with the passing of time and living through stuff. Okay. But you know what? You can learn from the experienced. So if you want to do that, join Blake and the team on the Morning Edge in 25 minutes. Adios, everyone. Good trading. Good luck. And we'll see everyone tomorrow. Adios. And thank you, John Navin, again. See you, Laura.